Welcome, everyone. What is up? I hope it's you, because the market certainly wasn't up today, closed down pretty hard. And people are wondering, I think, is this the beginning of lots more selling? I think it's the beginning of at least a little more selling. But if it's going to be a lot more, I hope I'll be able to tell you that. I think right now, what I'm going to tell you is no, it's not going to be a lot more, but it's going to be some. And that's going to make for some great buying opportunities probably next week, maybe the week after. But for right now, I've got a trade idea for you from Edgefinder. It just came out in the last hour, so I want to show it to you. Let's get right to it. I'm going to show you my slides. Big reveal for today is NVIDIA short. Yeah. Now, you could think of lots of fundamental reasons why you might think NVIDIA is done, why the AI trade or the flagship company in the AI trade is overbought and it's going to come back a little. I don't even care what it is. This is just a trade that shows a statistical advantage over and above random. Now, you got to get the trade above 189.32. If NVIDIA prints above 189.32 tomorrow, then you can look at the potential of grabbing a $6.71 move in your favor over the next three trading sessions. And certainly, if this trade's going to win, it's going to win before NVIDIA reports earnings in a couple weeks or more. The stop loss, just under $5, $4.92. That's the trade setup. Let me show it to you on a chart. This is what it looks like. NVIDIA had this big down day today and closed around 187, but it moves up and down a lot. So it's quite plausible that we'll be able to get it up above 189.32. And maybe we won't. Maybe tomorrow it just gaps down and just drops. And, oh well, missed the trade. These trades don't always fill. When they do fill, there is a statistically better chance than random. So we're putting out a trade idea from Edgefinder, which specifies you're only going to give this thing $4.92 of room before you stop out of it. And you can see where that amount is. That's back up at old highs, recent highs. If NVIDIA manages to make it up above those highs, chances are it's going to go even higher. So don't mess around with it. Don't still be in the trade. A good trade going NVIDIA long might be to wait until you see NVIDIA cross 195. Once it closes above 195, it will probably go even higher. But for today, looking at today's market open, or tomorrow's market open, going short. If you don't know about short selling, you can use put options. I'll talk about that in just a second. But for now, it's just think of the trade as going short if NVIDIA hits 189.32 or higher and gets above that line there, and then you watch for it to fall. And if it drops $6.71 or more, take your profit and move on to the next trade. That's the trade idea. Now, you might wonder, well, how do these trade ideas play out? I mean, are your trade ideas any good? Well, I happen to think they are. Over many trades last year, over 100 trades, I managed to generate 4 different model portfolios using these kinds of trades. The worst of them was over 20% return. The best of them was over 41% return. So it depends on the kind of trade you like, the style. But those are my official subscription trades I'm talking about. I never know which trade is going to actually win, but enough of them win, better than randomness suggests they should. Enough of them win and make enough profits that you usually end up doing a little bit better in the markets, maybe a lot better. The last 2 trade ideas we put out were Kimberly-Clark and IWC, the microcap index ETF. Let's have a look at how those things played out. Well, Kimberly-Clark was a winner, but IWC was a loser. Here's the Kimberly-Clark setup. It had a 67% win probability, which was higher than randomness suggested by about 7%. And as it turned out, it did win. In the case of IWC, there was only a 47% win probability to begin with, and that was about 7% higher than randomness suggests. Randomness suggests, because you see, we got that tiny little stop loss and this big profit target. When that happens, you're going to win less than 50% anyway, probably more in the range of 30 to 40%. Well, that's about what this was, about 40%. But Edgefinder said statistically, you win 47% of the time. This wasn't one of those times. As it turned out, the next two sessions, big down days. That's what's happened the past couple of days in the market. The nice thing is you got stopped out well before where it is today. So, I mean, if you're going to lose, don't lose big, right? Here's the NVIDIA setup. NVIDIA dropped a lot, and we have to wait for it to kind of move back up. Randomness based on how much profit, how much stop loss and how much profit target, it's the ratio that determines those things. Did you know that? Most people don't. Most people don't know that the ratio between your stop loss and your entry point and your target dictate what randomness suggests you should be able to win, what the probability of the trade is going to be. Little secret, AI doesn't even know that yet. That is to say, if you ask this question to ChatGPT and other large language model utilities, you go to them and say, what would the probability be of winning this trade if I set it up like this? And then they'll say stuff like, oh, you can't really know that. You got to do a lot of back testing and blah, 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 which is quite frankly incorrect. The whole options industry is built on these probabilities. The Black-Scholes equation kind of assumes random price action, and option market makers have to use these numbers in order to do their business. If they didn't, they would all go out of business. We wouldn't even have an orderly options market if what I'm telling you isn't true. But if you were to set up a trade where you had $5 potential risk and $5 potential profit, it's the fact that they're the same. That's what creates the probability. 50-50. That's your probability in that trade. This trade, the stop is a little smaller and the target's a little larger. That's why it's less than 50%. A randomness would suggest 42% win rate based on the way this trade gets set up. Edgefinder comes along and says, yeah, but historically, if you make this trade, you actually win it almost 5% more often than randomness suggests. Now, that's still only a 47% probability. So if you're waiting for something that's, higher probability, hang on. That'll be coming eventually, I'm sure. Next week, we'll probably have higher win probability trades. But for now, the nice thing about NVIDIA is if you do win it, you're set up, you can either get that good target or maybe even let it run farther because of the market conditions that we're in right now. Now, if you like trades that are so well timed, so perfectly placed, and their probabilities are, maybe 50-50, but the payouts are much bigger, you should consider this system. I've developed a system for trading liquid ETFs and stocks. That's SPY, QQQ, IWM, all the major index ETFs, plus the Mag 7 stocks, not Broadcom, but add Tesla, right? Those stocks that are highly liquid and that have options that expire once every, Monday, Wednesday, Friday. I've developed a system for trading these stocks with zero DTE options where you can buy the option at a small amount late in the day. Yeah, that's right. Late in the day. Here's the most recent example. Wasn't today, it was 2 days ago, or day before yesterday, Wednesday. IWM came down and it hit my target line. So I put the trade on, bought the 263 IWM, which expired that same day, and it went up. It went up to, as you can see, the price went up to 265, where I was able to take the profit at 105. Basically doubled the price of the option. Interesting thing there that if I were to have held on a little bit longer, the target at 11.50, it hit and it was double. But if you just had a trailing stop and it went even farther, you would have gotten $1.80 out of that trade. And yeah, that's what I did too. So this trade is really great because, hey, if you got a small account, you don't even need to risk more than $54 plus commission on this thing to do one contract. If you want to risk $1,000 because you've got like $100,000 account or something, that's anyway, that's 20 contracts, and IWM's super liquid, no problem getting 20 contracts at the price you're after. This trade amazed me. It came right down to that lower green line, which I'd set as my target, and I put the limit in, and sure enough, the trade fired off, and it was nothing but green from there. This trade is done by I'm able to do this because I'm using Edgefinder setups for the short zone, the long zone, and what I call the dead zone, which gives me the measure of the target. If you're interested in learning about how to make these trades, I'm putting together the opportunity to trade it live. And I'm hoping that you might be interested in that. I'm going to trade it live for free. You can just show up and watch me trade this stuff live. If you're interested in that, you need to get in touch with me on X or on LinkedIn. My handle there, Gordon Scott CMT. Either one will get me the note, and I'll make sure you get a chance to see when I trade it live. That's coming soon. Might be next week. It might be another week or two past that. We're trying to get things ready to make that happen. But these trades have really showed a lot of promise, and so I'm excited to share them with you. Meanwhile, you should check out myedgefinder.com and see where these trade picks come from. Till next time, everyone, take care and trade well.